All right. First things first, the bank account is now up over 45% year to date, hitting another brand new all-time high, and the bank account is trading the Bank S Plus high risk profile. As you can see with the equity curve, we have been going up straight from the October lows, and bank has not shorted a single time during this bank rally, just continuing to pile on the profits during what has been a very historical bull run off the lows. So if you want to come crush this market, Bank Trade Alerts is a great way to do that, and you get all of your buy and sell alerts for TQQQ and SQQQ via text message and email to your phone or your computer. So if you still haven't tried Bank Trade Alerts, now is a great time to do that because you can also take advantage of the Black Friday discount, which you can now claim using the coupon code Black Friday at checkout, all one word with no spaces. So if you've been wanting to try Bank Trade Alerts or you're looking for help on how to crush this market, now is a great opportunity to check out Bank with the Black Friday deal. All right. So today I want to start out on the weekly chart of the NASDAQ 100 triple Qs because it's without a doubt the most important index for the bull market we've had in 2023. And the number one thing I want you to pay attention to is during the weekend analysis, we looked at weekly charts and I told you if the triple Qs were going to break out and validate this was just a correction within a bull market, we were going to start needing weekly closes above this level, just above 383. Now you can see it's only Tuesday, but we're currently above that level. And if we can close above this resistance by Friday, it does look like above 383 on a weekly close that we're going all the way back to the previous all-time high. And on the triple Qs, that was up there right around 404. So this is going to be a very important week for the bulls because if they can close and break out here, it does look like a blue skies all the way to the next resistance higher on the weekly chart. Blue sky simply means if we get the breakout, it's going to be a very smooth trip to the next resistance level higher. Now, whether or not you believe that's possible is irrelevant. That's what the chart is currently telling us. And that would validate that we're starting to get our higher lows and continuing this bull trend ever since we had that correction that closed outside the weekly Bollinger Band. So it is possible this was just a correction, and if you look at it, it kind of looks like a weekly bull flag that we're now starting to break out of to the upside. So do not rule out the bullish scenario. It's looking more and more likely, even though we are getting a very vertical rally on the weekly chart. You can see it's very justified as long as we can close above this resistance by Friday. So jumping over to the daily chart of the triple Qs, you can see we had another huge gap up today. So we opened yet another gap to the downside, which is right there at 378. And we hit the next price target at 383 and got very close to the next price target just below 387. Now, if we can break through 387 and clear that previous high, that is going to invalidate a lot of bearish scenarios that would say if we were going to make a lower high, we would need to stay below 388. So the bulls are very close to taking over, and that doesn't completely rule out the fact that we are eventually going to need a pullback. Even in the bullish scenario, it's very likely at some point we're going to need some kind of higher low structure before we can push higher. But again, that's why I wanted to start on the weekly chart, because I was telling you if we close the week above 383, it's looking more and more likely that we just go straight to 400. But on the daily chart, what's more than likely going to happen at some point, we're going to reach a critical level of resistance that will lead to a pullback. And right now, the most likely area for that pullback would be a retest of the breakout of the resistance trend line, which would likely take us down towards 366 to 367. Now we also have gaps to fill, so we could go fill the gap at 363, but regardless, we are going to need this market structure of a higher low to confirm a bull trend. This has been a very impressive rally off the lows, and we've had little to no pullback because we only had that one day of red in between. If you just look at a closing prices chart, you can see we've had very little pullbacks along the way, and I wouldn't even consider this a pullback, more of just a cool down before we continued higher in that vertical fashion. So at some point, we are likely going to be due for that higher low pullback, and that is going to be an opportunity for a low risk long position. However, you need to follow the price action each and every day because we don't know when that pullback is going to come until we at least start breaking down through some support and start to put in lower highs on the hourly chart. If you go look at this on the hourly chart, we've been doing higher lows and higher highs, and that's the trend until it's not. So in the triple Qs, look for that next resistance zone just a bit higher between 387 and 388, and if we break above that, the next likely price target would be 393. To the downside, look for support levels at 383, 378, 370, and a retest of the breakout right around 367. Jumping over to SPY, we were up 1.94% today, and again another gap up, and we did also close a gap above, which was the gap right around 447. So we can delete that gap, and we can see the next resistance zone that we're approaching is right here at 451. Now if you draw a support trend line of this very impulsive vertical rally, you can see that we are going to need to break down below 440 and fill this gap at 441 before we break this support. So if we are going to continue this parallel parabolic vertical rally and we touch that trend line, it's possible we push again higher towards 455 to close the gap. Now, once we close the gap at 455, assuming we go straight there and break through that resistance at 451, then we will be very susceptible to downside because all of the gaps to the upside will be filled and we will only be left with all of these gaps to the downside, which we now have gaps at 441, 430, 423, 418, and all the way down here at 407. Now we know gaps typically fill, but they're not a guarantee that they will fill, but a lot of these gaps, at least at 430 to 441, are very likely targets for a pullback. So now that we are above the supply zone, which I was telling you was the danger zone, you can now assume that is a potential demand zone, meaning if we get down into that support zone in the 430s, it is possible that that is our pullback before we continue higher. So there's many ways this can play out. It's more important that you have a trade plan around these critical levels. And to the upside, the next critical resistance zones will be 451 and 455. If we start to pull back immediately and we don't exceed the resistance at 451, then you're looking for gap fills at 441 and strong support zones between 440 all the way down to about 436. If we cannot hold this support zone and we break down below it, then you'll be looking for that gap and support right around 430. So know these critical levels and understand we will need a higher low. Even in the bullish scenario, eventually we are going to get some sizable pullback, and pullbacks can be anywhere between 2 to 7% or possibly even more, and they're usually going to take at least 3 days. So we have not yet had that pullback, and it could come at any point now because of how vertical the nature of this rally has been and how many gaps to the downside it's left open. If you want to see another time in the market where we've had a vertical rally like this, simply go back to March 2022 and you'll see we have a lot of very similar nature from this rally. On the Dow Jones, we were up 1.41% today and we gapped up above that resistance at 345 and we're very close to that price target up there at 350. Now I talked about this last night. If we went straight to 350 without a pullback, that would likely be where we get the pullback from before we continue any higher. And I still think that's the case. I think the Dow Jones will likely fail to break 350 and come down to fill some of these gaps around 344 and 338. Now it's possible we simply retest the breakout around 340 to 341 and don't fill the gap at 338. But again, these are very vertical rallies and we know gaps typically get filled, so it'd be very healthy to come down here and fill at least 2 of these gaps. From there, if we're going back into a bull market, we should get a higher low into a higher high breakout and then continue towards the previous all-time highs. On the Russell 2000 IWM ETF, we were up 5.49% today, so the small caps are finally showing some strength on very high volume buying, with a very nice gap up above the 50 EMA and resistance zone at 174, and we closed higher towards a resistance at 179 and gap fill target at 180. I thought this was a good chance we would either fill the gap at 165 or hold this support at 167 and then bounce to 180, and so far that's what's playing out. But once we get to 180, we're going to be met with resistance at the negatively sloping 200 daily moving average, and that is going to be the next critical resistance zone we need to break. If we can break through the 180s, then we likely push higher towards 190 and start back into a bull trend and finally break out of this bear market the small caps have been stuck in. If we get rejected from 180 and we come back down, look for the critical support at 174. And if you want to view this very simply, just stay bullish above 174. And if we break below 174, you're looking for the gap fill below 170 and 165. On the ARKK ETF, we were up 5.11% today and we bounced from this higher low at 39 and broke the high at 41. So this is looking a lot more bullish while we're above 41. So to make this very simple, I'm going to consolidate this support and just call it 41. And as long as we're above 41, you can stay bullish on ARKK. If we break down below 41, look for the gap fill right around 40. And if we can't hold that support, then we're likely coming down towards the gap fill at 38. The next upside resistance zone will be between 43 and 44.5. On the VIX, we were down 4.2% today as the VIX is back down near these previous lows at 14. And if we are going to get a higher low pullback, it's possible the VIX still spikes up towards 18 during that process. What's important is if we're going to stay in a bull market, we need the VIX to stay below 20, because if at any point the VIX starts breaking out and closing above 20, that is likely going to be a high fear environment we would expect to see in a bear market. Right now we have the low fear environment, which is the bull market scenario, so you can stay bullish as long as we're above critical support and as long as the VIX is staying below these elevated levels. On Bitcoin, we're currently down nearly 3% as Bitcoin is pulling back from that resistance at 37,000 and retesting this support zone at 35,000. In the extremely bullish scenario for Bitcoin, we should hold this support, bounce and break 37,000 and start higher towards 40,000. Because we do have such a strong bull trend, that is always a possibility, but if we break the support at 35,000, it's likely we come back down to retest the breakout at 32,000. On Tesla stock, we were up 6.12% today, and Tesla gapped up above that resistance at 230, and I did tell you above 230 we would likely go fill the gap at 242, and I still think that is likely. However, I want you to be aware the Bollinger Bands are very squeezed, and that gap is currently outside the upper Bollinger Band, which, while that doesn't mean it's impossible we go to 242, it's going to be very difficult because it'll be outside the upper Bollinger Band. So pay attention to that Bollinger Band and you can stay bullish above 230, and if we can't hold above 230, then we're looking for a gap fill at 225, and you can stay bullish as long as we're above 222. On Apple stock, we were up 1.43% today as Apple gapped up yet again and continues higher towards that next resistance zone between 190 and the gap fill just below 191. We don't have any higher low pullback yet in Apple, so it could come at any point, and we also have gaps to fill below at 186 and all the way down here at 158. Again, we don't know when these gaps will fill, just be aware of them, and the most important support right now is this breakout zone between 180 and 182. If we cannot hold the retest of that breakout during the pullback, it's likely that we're coming back down towards 177 to 174. So jumping back over to the S&P 500, this is a very bullish breakout across the board in all of the major indices, and this is all happening on a very vertical rally with no pullback, so at some point we are going to be due for that pullback to put in the higher low. In the bullish scenario, we'll get the higher low into the higher high, and in the bearish scenario we're going to start breaking down, and that means we would give back a lot of this vertical rally with a very vertical sell-off. And again, never rule out any scenarios. It's okay to have a preferred scenario, but it's more important you know both of the scenarios and manage risk around the critical levels. So don't forget to take advantage of the Bank Black Friday deal where you can currently get 50% off 1 month of Bank Trade Alerts, and with Bank at all-time highs, we are absolutely crushing this market, so now is a great time to check out Bank. I also have the Stocks Channel Discord community if you're looking for my intraday technical analysis, and you can find out how to join all of those services by clicking on the links in the description of this video. So thank you for watching, everybody. I hope you're crushing this market, and as always, I will see you in the next episode.